All right, we got a lot to cover in this video. Put out a video yesterday with my thoughts on Bitcoin and the rest of the crypto market. Some of you took offense, like I was like making fun of your dog or your grandmother or something. It's nothing like that. I'm just putting out what I think is a realistic take. If you don't like it, there are plenty of other YouTube channels that are gonna paint for you pretty skies with rainbows and unicorns and tell you they're holding your hand all the way up to 100K. We're not doing that here because I don't think that is gonna happen. I told you what I think is gonna happen. That scenario actually is playing out. So if you like the realistic takes, stay here, hit the like button. I will keep bringing them to you. And for those of you who go in the comment section that tell me I'm a bear and I just want Bitcoin to fail, nothing could be further from the truth. I hold Bitcoin, I hold DOT, I hold all of these cryptocurrencies. So when they go down, you know what? I lose money just like you. And guess what? That comment doesn't even make sense, Stugotz, because hey, even if you did want Bitcoin to go down, you are shorting this market. You can make infinitely more in a bull market than a bear market. How much can you make max on a short sale? Max would be 100%. Is anybody coming into this market to double their money? It just doesn't make sense. I want this to go up, but I just don't think it's realistic right now. Let's take a look at this. This is what I've been telling you guys about. Bear market rallies. What are they? These are short-lived rallies that are in an overall bear trend where it can't go down forever. It pumps a little bit. With Bitcoin, this could be 30 or 40%. However, this is very, very dangerous because generally the overall bear trend takes over. Thus, people that got re-involved, they already lost and now they've been, convinced to buy back in again. They sell again, driving the price down further. These are dangerous rallies within a bear trend. So let's take a look over here. This is where we're at right now. You can see we popped right up here to this level, just over 24,000. But guess what was I telling you about yesterday? The top level, the top line of this Keltner channel has just been so accurate. It's not me. I didn't make the Keltner channel. I have nothing to do with it. But all I can see is when you go and you look at top Bitcoin indicators, the Keltner channel is a top indicator. It's so many times that this top level of the indicator in this bear trend that we've seen since the blow off top at 69,000 has been accurate. And look, what do you know? Absolutely perfectly accurate again. You had it come up, basically touch the top level, and now it is working its way back down. And that is what happens in a bear trend. This level, you can pump above it. You can pump above this middle line, but generally it will be short-lived. And look, when you have a red candle like this with a wick that comes all the way up and then the candle body closes down here, followed by another red candle, come on guys, that is not good, right? That's what we've seen right here. Led to the downtrend. We've seen that over and over again where that's led to a downtrend, and that's not good because what that means is you had people buying up, and that's why the wick goes up, but then it exhausts. There's an exhaustion of buying power, and then candle body closes lower than the buying power takes it up, and then the next day there's no buying power left. And then you know what's gonna happen the next day? We're gonna hear about a 75 or 100 basis point interest rate hike in the United States. And this is going to come all the way down again, just like I told you was going to happen. Does it have to happen? It absolutely does not. But look, this is what's happened over and over again. These patterns are so familiar by now. And, do I want this to go back up? Yeah, but look, we're not seeing anything in the chart, in the on-chain analysis that makes us think that it's going to. And if you look at this one, here we have the DXY or the US dollar currency index. And look, ever since we had this W pattern, which is a bullish pattern right here. You have this double bottom right here, W. Then once it broke above this level right here, which was the formation of the pattern on the other side, once it broke upon this side of the W, broke above this, we've just seen this DXY, which is the strength of the dollar as a fiat currency against other global fiat currencies, rip higher and higher and higher. We're looking at it a 1 week time frame, but look, if you look at it on the daily, here's the W right here, just been ripping up. And then we had this cup and handle right here, another bullish pattern. And then it didn't quite make it all, because when you have a cup and handle like this, generally once you get past the breakout, which is the handle, once it breaks past the handle, the formation of the handle from here to here, the breakout is defined right here. So once you break out there, this is a measured move. So you would measure from here to the top of the cup rim, and that's what you would apply on the top of the breakout. So that would have put it at about just over 110. It didn't quite get there. And now it's gone back down. So everyone's like, oh, it's going back down. You guys are telling me in the comments, DXY is dropping. However, look at this trend line. It's just dropping down to this trend line. And this is what we talk about. Did it make it all the way to the formation of the pattern? No, it didn't. But it's really respecting this trend line here that we've been seeing for the DXY. So what? The DXY is putting in higher high, higher high, higher high. If you look over at Bitcoin, it's doing the exact opposite. lower low, lower low, lower low, lower high, lower high, lower high. It's just in a complete opposite formation. And what we've seen over time with the DXY, bring up the weekly chart, it's easier to see. When you look at the DXY, these periods of strength for the dollar as a fiat currency has not been good for Bitcoin. On the opposite time, when the DXY is failing or suffering or dropping, these have been very, very strong times for Bitcoin. And it really does make sense, right? A stronger dollar, people want to hold dollar. A weaker dollar, people look to diversify into other assets. But when the dollar is strong, people dump their more speculative assets. And we haven't seen a DXY this strong in close to 20 years, back in September of 2002. So the only thing that I think could disrupt this is that the dollar gets too strong. So right now we're seeing dollar 1-to-1 with the euro, right about 1-to-1 with the euro. If the dollar gets too strong, we may see another round of quantitative easing in the United States, printing more money. Now you increase the supply, I feel that the strength of the dollar would decrease. That might be on purpose. However, I think that could decrease the strength. That could lead to a stronger Bitcoin long term, but I don't see that happening right away. And then the big news yesterday, Elon Musk reported that, or basically they had to report their earnings. Tesla had sold 75% of their Bitcoin in Q2. So Michael Saylor, obviously Bitcoin evangelist, if you will. I don't know, a lot of you participate in the church of Michael Saylor. If you sell 75% of your Bitcoin, you will only have 25% of your Bitcoin left. He cites no sources for this, so I don't know. Take it with a grain of salt, but like, I don't know that it really matters. This definitely, did this dump there's speculation that them selling this amount of Bitcoin, dump the price of Bitcoin, caused 3AC to get into their problems, caused Terra Luna to get, it's all possible, but it's all theory at this point. I don't know that that's necessarily true. However, if Elon Musk and Tesla don't want to hold Bitcoin, I'm fine with it. I don't know how you guys feel about it. Let's take a look at this. This was a pretty interesting story. Whale activity for Dogecoin and 2 Ethereum-based altcoins is heating up. And those 2 Ethereum-based altcoins, drumroll please, Matic, Polygon, just talked about them. I've been talking about them for the past week. They were in my altcoin video. Check it out right here. And Uniswap. And it says right here, with many altcoins enjoying a solid rebound, these altcoins are really topping the list as far as whale activity. People, large holders of Ethereum on the Ethereum network. So Doge, Matic, and Uni are noticeably seeing rises in these large transactions on their networks. The other thing that Sentiment, this is the company that put this out, they put a lot of on-chain analysis out. They put out this as well. This is pretty interesting. Cardano, Polkadot, Kusama, and Ethereum, and they also list MIOTA, are the most active when it comes to GitHub submissions over the past 30 days. So this is big when you think about it, because as we always talk about, these are all speculative, right? Like, not many people are using DOT at scale. Not many people are using Ethereum to run their business, right? So these are all speculative right now, but what this shows is a lot of developers, and increasingly more developers are coming to these blockchains especially, they're submitting code samples. So we see increased AMP development coming to these blockchains. I always find, if they build it, they will come. And what people are talking about with Web3, with blockchain, with DeFi technology is it's just, we don't have enough developers there right now. So this is good news to see. And then we have Vitalik speaking at an ETH conference going on right now. He says after the merge to proof of stake, Ethereum will be 55% complete. And this is a pretty interesting article. I encourage you to go back and read, this one. You can go back and read all of them. Everything linked in the description box below. Check it out. And he did put this out a while ago when he was speaking on Bankless. So he talks about these 4 phases, these 4 upcoming phases of Ethereum. So you have the merge. That's what we're all really familiar with. This is the merge from proof of work over to proof of stake. Then there's the surge. Then there's the verge. And then lastly, we'll have the purge. So obviously the merge we all are pretty familiar with. He anticipated date for that, September 19th. So hopefully we'll keep our fingers crossed. As I am updated about this, seems like the last testing is the Ropsten mainnet. So that is the last round of testing. Seems like everything is going pretty well with this migration. So the surge refers to the addition addition of 64 shard chains, which are expected to reduce the congestion of the main chain by distributing traffic. And this is why I put Polygon, and this is what we're seeing with Polygon, I think why we're seeing a lot of whales come in on Polygon. This right here is talking about Polygon and Arbitum and it's basically saying these are going to have their own shard, which is going to allow them to operate in a more optimized way and also, deliver that traffic to the Ethereum main chain in a more efficient manner. The Verge pertains to the addition of stateless clients, which is designed to make the blockchain more decentralized. And then the Purge involves removing historical data in a bid to streamline the network. And the interesting thing about the Purge is where is that data going to go? Because what that is essentially saying is we want to free up, our main chain and any clients from holding all of this historical data. So that has to go to something like a BitTorrent or a Filecoin or something like that that's going to hold that data long term. And then he also discussed some other EIPs, Ethereum improvement proposals, especially this one right here, 4444. And that's what I'm talking about with this proposal focused on storing this historical data. Mentions things like the graph could be big, BitTorrent, I would think things like Filecoin or stuff like that as well. And then he closes with this short-term pain, long-term gain. So it seems like all the changes and all the development, it may lead to some short-term pain for this blockchain, for dApp creators, for validators, for whoever it may be. But long-term, this is really laying the groundwork, and this is going to lead to Ethereum hopefully being here in not just 5 years, but 10 years, 15 years, and beyond. So pretty big news there. He also did mention once the merge to proof of stake goes into effect, if you do have ETH that you've delegated to the smart contract that has been locked up, you will be able to get those funds back at that time. All right, I hope you're not eating anything because this is going to make you sick. By the numbers, the $1.2 billion hole in the Celsius balance sheet. We knew that number existed, that $1.2 billion number was out there. However, now that the bankruptcy hearings are taking place, we're starting to get more of the details. So look, in total, they owe their customers $5.5 billion. However, they're only holding $167 million in cash. Now, they have some other assets here and here and here. Obviously, we know they were affected by 3AC and other bad investments, but how do you have $5.5 billion customer assets and $167 million in cash? That is the definition of a Ponzi scheme, guys, right? You're using new deposits to pay withdrawals, and you have not a lot of wiggle room here. And this was probably going on for years and years. Everybody behind this, Alex Mashinsky, all the scumbags behind this, I hope you get what was coming to you. And if you were, involved, if you did lose some money, I do apologize. I will keep you updated as far as, relief efforts. They've talked about partial payments or being involved in their Bitcoin mining. It's just an absolute shit show. Some good news over here, Crypto.com launches Google Pay purchase feature. And I've used the one for iPhone. They did Apple Pay just a couple weeks ago. Very seamless integration. And I like this, right? Because we talk about mass adoption. What is mass adoption? It's getting your mom, your grandmother, people that they don't know about crypto. They don't know how to go and do this. They don't know about DeFi. This is a way to reduce that barrier to entry, reduce that friction. Everybody knows Apple Pay or Google Pay, you do it at the market or whatever it is. So I think big things are coming for Crypto.com. They're always releasing very nice features. And look, even though we're in this down market, Chronos falling, all of these things, CRYPTCOM falling, exchanges make a lot of money, guys. Centralized, decentralized, they make a lot of money, and Crypto.com is no different. Plus, they are flagship sponsor of what is going to be the biggest sporting event in the world. Of course, I'm talking about the World Cup happening just a couple months. You're going to see them everywhere. So I think it's going to be a strong finish to the year for CRYPTCOM. Crypto.com always releasing some nice features as well. And can't do a video without talking about TERRA, USTC, 4 cents. Luna's at that number right there. Look, I was on the steering committee the other day. Some really good information. I made a video on it. Check that out right here. But look, if they have another one coming in the next couple of weeks, what's going on right now is a lot of behind the scenes, not super exciting, not very sexy, not pumping the price type of things, but is laying the groundwork. I anticipate V21 or version 21, which is the hotly anticipated new version of Luna Classic, going live on this blockchain. Don't quote me on this, but it seems like things are progressing well. Should be in the next couple of weeks. If you have questions for the Luna Rebels, let me know in the comment section below. Until the next time, be safe.